age of instant miracles, markets fell in love with a promise: artificial intelligence, machines that could think, learn, and remake the world. But when belief runs faster than reality, what begins as hope can become a fever. This is AI Mania, a story of enormous ambition, faster fortunes, and the quiet casualties left behind. Because every revolution changes someone's fate. Some rise with it, others are destroyed by it. It started innocently enough. A breakthrough here, a new demo there. A chatbot that could hold a coherent conversation. A chip that could accelerate millions of calculations per second. Investors smelled possibility, and then they smelled profits. Wall Street is a marketplace of stories. When a story promises the next industrial revolution, money moves like a storm surge. Stocks tied to AI rose, pundits proclaimed winners, and funds crowded into a single idea: own the future. But this mania was different from past waves. The growth was not only in companies that actually built AI, it spread like wildfire into every corner of the market. Legacy firms rebranded themselves AI. Small startups claimed breakthroughs with elegant slides and optimistic roadmaps. Even businesses with no obvious AI product suddenly added the word to their investor decks, and the market rewarded them. At the center of it all was a simple narrative: data is the new oil, and AI is the new engine. This story was so compelling that it overshadowed everything else. Traditional metrics like price-to-earnings ratios started to feel outdated. Why worry about today's profits when you're investing in tomorrow's world? The fear of missing out, or FOMO, became the most powerful force on the trading floor. Everyone wanted a piece of the action, from seasoned hedge fund managers to retail investors trading on their phones. The message was clear: get in, or get left behind. But what happens when the story is all you have? Behind the soaring stock prices, a different reality was taking shape. For every genuine innovator, there were dozens of imitators. Companies with little more than a concept were being valued in the billions. The hype cycle was in full swing, fueled by constant media coverage and a chorus of online influencers promising life-changing gains.
It was a gold rush. And in a gold rush, the ones selling the shovels often make the most money.
In this case, the shovels were the chip makers, the cloud providers, and anyone who could supply the infrastructure for this digital revolution. This created a feedback loop. Rising stock prices validated the AI narrative, which in turn attracted more investment, pushing prices even higher. It felt unstoppable, a virtuous cycle of innovation and wealth creation. But bubbles are built on belief, and belief is fragile. As the market climbed higher and higher, the stakes grew. The line between visionary investment and reckless speculation blurred. Everyone was betting on the future. But what if that future didn't arrive on schedule? Or what if it looked completely different from what everyone expected? The promise of AI is undeniable, a force set to reshape our lives in countless ways. But the story of AI Mania is also a cautionary tale about human nature, our tendency to chase dreams, our herd-like behavior in the face of opportunity, and our collective amnesia when it comes to the lessons of the past. As we stand in the midst of this technological whirlwind, it's crucial to ask, are we building a new foundation for society? Or just a beautiful castle in the sky? The answer will define the next decade, for better or for worse. In the heart of the storm, one thing was king: hardware. We're talking chips, data centers, and the vast cloud infrastructure that powers it all. One name, in particular, became the symbol for this entire movement: a company selling the very engines of modern AI. Its valuation skyrocketed. Its market cap wasn't just a number, it became a testament to a collective belief in the future. It was as if everyone started pricing tomorrow's profits into today's stock, convinced the money was already locked away. And people bought into it. From retail investors on their phones to massive hedge funds, from young engineers with stock options to seasoned veterans wanted a piece of the action. It felt like a story the entire world was desperate to be a part of. But we must remember, every revolution changes destinies. Some rise with the tide, while others are swept away by it. History, however, often speaks in whispers. Long after the shouting has died down, it reveals itself in the hard data, the footnotes, and the unvarnished truth of a balance sheet. When we peeled back the layers of hype and looked beneath the catchy slogans, a different reality began to surface. Many companies chasing that AI premium had surprisingly thin revenues, no clear path to profitability, and forecasts built on a foundation of overly optimistic assumptions. Promises were turned into valuations, and those valuations were used to fuel even bigger promises. Of course, some investors saw the writing on the wall. They raised red flags, pointing to the metrics that truly matter. Revenue growth that wasn't keeping pace with customer adoption. Price-to-earnings ratios that had completely detached from reality. And cash burn rates that assumed an endless supply of capital. But the believers accused these skeptics of failing to grasp that radical transformation often comes before profit. This created a fierce conflict in the world of finance. On one side, you had the true believers, convinced that AI was the next, irreversible stage of human progress. On the other, you had the traders and analysts haunted by the ghosts of bubbles past the dot-com bust. The crypto winter who demanded cold, hard evidence. To truly understand this high-stakes drama, let's look at three key figures who found themselves at the center of it all. Each represents a different side of this incredible story. In the grand theater of the market, three characters always take the stage. First, the believer. This is your venture capitalist, your fund manager, the one who sees the long game. They look at a company and don't just see numbers. They see a vision, a future so bright that today's losses are just the price of admission. For them, missing out isn't just a financial mistake. It's missing destiny itself. They bet big on the promise of tomorrow. Then there's the speculator. This could be a day trader or even you and me, glued to our phones. They buy on a whisper of a rumor and sell on a viral retweet. Every headline, every influencer's post becomes a reason to trade. They ride the wave of momentum, turning market chatter into dramatic price swings. They're not betting on a 10-year plan. They're betting on the next 10 minutes. Finally,
We have the skeptic.
these are the analysts poring over spreadsheets, the short sellers actively hunting for inflated stocks. They're the constant, quiet voice, reminding everyone that a great story doesn't always make a great investment. They believe that eventually, gravity and valuation always wins. The market is where these three forces collide, where powerful stories clash with cold, hard numbers. When a story, a narrative, becomes powerful enough, it can bend the rules of rational investing.
When the momentum traders to speculators flood the market, they can easily overwhelm the skeptics.
And that's when prices disconnect from reality and shoot for the moon. A flood of buyers swamps the few remaining sellers, and the price charts go vertical. But calling every rapid rise a bubble is too simple. The folly is more subtle than that. Think back to the dot-com era. That period gave us giants like Amazon, companies that fundamentally reshaped our world and created incredible fortunes. But it also left behind a graveyard of failed startups, companies that burned through cash with no real business plan. This paradox is simultaneous creation and destruction within the same. Technological revolution is the core of what we re-see again today. Within the world of AI, this exact same duality is playing out. On one side, you have companies building the essential foundations, the advanced chips, the massive cloud infrastructure, the complex pipelines needed to train these powerful models. This is the real, tangible work. But on the other side, you have companies that are essentially just marketing a clever, shiny layer of AI gloss painted over a very weak or non-existent business model. And for a while, the market, desperate for the next big thing, rewarded them both. It couldn't tell the difference between a real server room and a slick pitch deck, but reality always has a way of making itself heard. It starts not with a bang, but with a whisper. Growth forecasts, once stratospheric, start to slow down. A major company misses its earnings target. A big client, once enthusiastic, suddenly delays their deployment. The first cracks aren't loud headlines. They're tiny moments of hesitation. A CFO who suddenly becomes more cautious. A signed contract that gets postponed. A quarterly report showing user adoption is just a little bit slower than everyone expected. And here's the dangerous part. When a structure is built primarily on belief, on a shared story, panic can spread much faster than reason. Those tiny cracks begin to widen. A few canceled orders become a wave of them. Investors get nervous and start pulling their money out. This triggers a vicious cycle of forced selling, where fund managers have to sell not because they want to, but because they have to meet redemptions. In this chaos, the gentle process of price discovery becomes a brutal, frantic race for the exit. The red on the trading screens flashes brighter. The sell buttons are clicked with increasing urgency, and belief evaporates into thin air, leaving only the stark reality of the numbers behind. Understanding these dynamics is key to navigating the markets, especially during times of intense hype. It is about looking past the noise to see who is truly building. Behind every stock ticker and market graph, there are human stories. A startup founder who poured their life savings and angel investments into a dream. An engineer who walked away from a stable job, betting on a future promised by stock options.
A small-time investor who leveraged every dollar they had to buy into the narrative.
For some, the gamble paid off, and they rode the wave to incredible wealth. For others, the wave crashed, taking their savings and their faith with it. When the hype outpaced reality, the market inevitably turned. The true believers called it a healthy correction, a temporary dip. The skeptics called it a much-needed cleansing, a return to sanity. And history, patient and indifferent, simply recorded both versions of the story. You can see the echoes in the empty office spaces, the closed signs hanging on the doors of once promising startups. In 1999, it was the internet. In 2024 and beyond, it's the technology changes, but the script feels eerily familiar. A phase of wild excitement, followed by excess, and then the inevitable reckoning. It's a reminder that every revolution has its winners and losers. Some rise with the tide, while others are swept away by it. So, where does that leave us now? The question isn't whether AI can change the world. We know it can. The real question is whether the current market prices reflect a genuine, productive transformation, or just a fevered, speculative chase. The future is always a bet. Investors are placing their chips on human ingenuity, on companies that can turn powerful models into real-world revenue, on the massive infrastructure needed to scale, and on governments creating regulations that allow for responsible innovation. To navigate this, we need to watch the signals closely. Are the core AI companies actually profitable? Are customers sticking around and paying for these services month after month? Can the exciting new startups move beyond cool demos and build products that scale? And we can't ignore the bigger picture, the geopolitical chess match over chip supply chains, export restrictions, and national strategies that make AI not just a market play, but a global battleground. These are the signs that will tell us if this boom is different or if we're just watching history repeat itself. This isn't just about technology. It's about the very real human gamble on what comes next. It's about understanding the difference between a revolution that changes our lives for the better and a bubble built on pure speculation. The stakes have never been higher. But we're not just talking about cool tech. We're talking about money, power, and the high-stakes game that's reshaping our world right now. Think about it. We've seen this movie before. The dot-com boom. The crypto craze. Every time a groundbreaking technology emerges, a tidal wave of excitement and investment follows. Fortunes are made overnight. But when the dust settles, not everyone is left standing. The AI boom feels different, bigger, faster. But is it? Is this the dawn of a new age? Or are we just living through the biggest bubble in history? The stakes aren't just financial.
They are social.
AI has the potential to automate millions of jobs, concentrate immense power into the hands of a few giant tech platforms, and completely rewrite the rules of economic competition. When that kind of disruption happens, there are always winners who gain incredible dominance, and there are losers who pay a heavy price, sometimes literally, with their livelihoods and their life savings. We're already seeing the early signs: automated factories, news reports of mass layoffs, and the anxieties of a workforce facing an uncertain future. So, in the middle of all this mania, how should you act? It's not about finding certainty where there is none. It's about asking the right questions. We need to learn to distinguish between companies that are selling real, tangible capabilities and those just selling hype wrapped in a fancy story. We need to look for the signals amidst the noise. Is there actual revenue? Are people and businesses truly adopting the technology? Or is it just a demo? What are governments and regulators planning? And most importantly, we have to be honest with ourselves about our own narrative. Bias that very human tendency to fall in love with a story where the future is already won, and everything goes up and to the right.
Behind all the stock charts and market caps, this is a human story.
It's about the founders who are dreaming of changing the world, the engineers working late nights to build the future, the professional traders making billion-dollar bets, and the everyday retail investors who are putting their hard-earned savings on the line. That's the real drama. This revolution will undoubtedly build new empires and create unimaginable wealth. But it will also leave a trail of wreckage in its wake. That's the double-edged sword of progress. At the end of every great economic era, we tell stories to make sense of it. All the incredible gains and the devastating losses. We celebrate the heroes, the visionary founders, the savvy investors, and we tend to quietly bury the tragedies, the failed companies, the shattered dreams. But if there's one lesson that history keeps trying to teach us, it's this: every single revolution changes someone's fate. For every person who rises with the tide, another is swept away by it. Think of the victorious founders on magazine covers, but also remember the small businesses that were shuttered, the empty server racks of failed startups, the veterans of past tech waves who were left behind, and the hopeful young engineers just starting their journey. AI will shape our future. In fact, it already is. Whether this journey leads us to a new golden industrial age or passes through a painful purge of failed ideas depends on more than just slogans and buzzwords. It depends on the hard, unglamorous work of turning a cool capability into real, sustainable value. It depends on building businesses that lasts, not just ones that capture headlines. And it depends on tempering our own blind faith with clear-eyed, critical analysis. This revolution is still being written, day by day, line of code by line of code. And as always, history will eventually be the judge. It will ask us to look back and see who bet wisely, who built something real, and who simply paid the price for believing in a story a little too soon. Thanks for watching! If you want more true stories about money, power, and the forces that shape our world, make sure you subscribe to Wall Street Legends. We'll see you in the next one!